Okay, we're going to get going very shortly. Just for those that are on YouTube, I can't actually see the YouTube chat. So if you log on to our live stream on YouTube, you can put questions in, but I can't see them, so I won't be able to answer your questions. So just before we do move along into the full-blown webinar, if you want to head over to our website and head over to acy.com, education webinars, you're more than welcome to register for the live webinar now, and then you can ask questions. Other than that, you're more than welcome to watch the stream. I just can't answer your questions because I can't see the chat. All right, everybody, welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Thanks very much for attending. Before we move along, please read through this disclaimer. And if you have any questions as we're going through the webinar, please do just type them into the Q&A box. And I'm just watching the chat. Somebody's chatting to me saying, go the Aussie dollar. It's moving down nicely. All right, so moving along. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor at ACY Securities. I'm a full-time Forex trader. Been trading the market now for more than 15 years, mentoring clients for more than 10. If you need to contact me, you can get me at that email address on screen, duncan.cooper@acy.com. So any questions about the webinars, feel free to give me a contact. If you want to follow me at the acy.com website, you can get me on the market news tab where I'm doing some analysis. And I think as well on the education tab, you'll find some of the education videos I've been doing. On YouTube, ACY Securities Australia is the handle. You'll find my analysis videos there. Twitter, if you want to connect with me personally, you can connect with me on Twitter or LinkedIn at those handles there. I'll just leave that on screen. I've got somebody asking me a question. Okay, Olivia, you're asking me positive and negative divergence appears to be reversal. What about continuation divergence? I've never heard of continuation divergence, so I don't know really what you're talking about there. I've heard of hidden divergence, but I've not heard of continuation divergence. I might have to go and Google it. Sorry, I can't answer that question. All right. Just moving into the beginning webinar series, what have we been doing? We've been going through these topics over the last 4 weeks and into this week. Yesterday went through MACD. Tomorrow evening at 8 p.m. Sydney time, we're going to go through the average true range and session opening times. And then over the coming 1 to 2.5 weeks now, as we head towards Christmas, we're going to be going through some trade setups. I'm going to be taking you through support and resistance zoning, some more trade setup styles on swing point break, trade setups using limit order at support and resistance zones. And I'll also, just to finish off, take you through a new module on risk and trade management. So that's what's coming up. Tonight, we're going to go through the charts and do some live analysis. I'll give you the levels that I'm looking at. I'm going to go through trends, support and resistance, levels I'm looking at. Okay, so let's get to the charts. And just before we do, just want to put into the chat, just want to see who's on tonight. Any new faces? There's no new faces on there at the moment, but if you need to download my trading platform configuration, I'm just going to give you the link for that. For those on YouTube, I can't give you the link, but if you do attend a webinar in the future, you can get the link from me. All right, so what you'll see is that my charts do look a little bit different to a normal download from the acy.com website. So if you want to upgrade to my charts, you need to download this Mt4 Webinar Configuration file, double click on it, somewhere on the screen. And then inside it, there are folders that you need to move to the Mt4 platform. There's a video inside that shows you how to do it. So you will need to download WinRAR software, WINRAR. It's a free download, so you can open up the locked folder and then move these folders to the Mt4 program folder file. Just watch the video. It takes 2 minutes long. I'll show you exactly how you do it, and you shouldn't have any issues. All right, so once you've done that, then you'll get my look of charts. It doesn't delete anything that you've already got in your platform. What it does do in the templates up here, it will add in these 4 templates: indices, mega trend. You won't get this one. That's a new one I've just created. Pivot points, daylight saving, and pivot points. So those 4, that one, that one, that one, and that one. Along the toolbar here, it'll just add in a few extra buttons for you. Down here in the profile section, you'll get these 4 profiles, which is basically a group of set charts. So a group of saved charts. And currently I'm using the 12 pairs. That's the one I'm going to be using tonight. That's what I'm normally using. All right. What you'll get along the bottom here is 12 currency pair charts in 15-minute time frame and a daily chart of the dollar index. I've got a few extra charts here that I'm looking at, but that's what you'll get when you do the setup. I don't spend all day long on the 15-minute chart, but that's how it sets up when you do the setup. Okay, so feel free to set it up. It doesn't delete anything in the platform. It just adds in my charts and indicators. Olivia, your question now is, you mean hidden divergence? To answer your question, I would need to go away and research it. I have read about it before, but I don't use it. And you're saying, is hidden divergence not a continuation in nature? Well, again, I'd have to go and research it. I mean, if you go and Google search hidden divergence, I'm sure you'll find 100 websites or more telling you exactly what it is, but it's not what I use. I just keep it very simple. I just use MACD trend, just using the trend of the indicator, or I just use negative divergence or positive divergence. I don't use hidden divergence. Or I think hidden divergence might be when the indicator is going in trend, but price action is going against trend. But I could be wrong. But if you go and Google it, I'm sure you'll find the answer. I'm going to make a note. I'm going to look it up later on to see if I'm right. But what I would recommend to you is, don't make it too difficult. If you go and look up MACD divergence, I gave it to you as simply as I could do last night. Whereas if you go and research it, I'm sure you're going to find 100 different ways that people use it, and then it'll get all complicated. All right, so I recommend you just keep it nice and simple. All right, let's get to the charts now. Price has been moving up to resistance areas, and I actually took some trades just to show you how you could have traded at some levels, because price was at the levels a good couple of hours ago. And I can't say, well, trade at these levels now when we're doing the live webinar, because price isn't there anymore. So I wanted to show you how you could have executed some trades. Now, price might get back to those levels and you might think about executing later on in the day. But that being said, that's up to you. So let me go through the charts and start with the Aussie dollar, which has been in a lovely downtrend. I'm going to go up to the day chart. So this very sustained trend going down. In fact, I'm going to move to the monthly chart first of all, just to show you that the higher time frame trend is quite clearly down. Lower top, and we have put in a lower bottom yesterday, and we closed very much to the low of the monthly candle, like these turned down. So in my mind, there's no doubt where the trend is, and this weekly trend was up, but I did say up here that was just a pullback against the monthly trend, and I'm expecting the weekly chart trend to turn down when we break that low, which is done. But I was talking about that 4 weeks ago. So we've come down and challenged this monthly low, and the market's just deliberating, can it move through? It might need a bounce up, so just be aware of that. To the day chart, this is my monthly level of support here at 7106. And this is the weekly low that we've broken, so that becomes new resistance, and that's at 71.70. And we really just kind of track between those two levels. We traded below monthly support yesterday, but couldn't remain below. And we tested yesterday and today this 71.70 level. Move it to the 4-hour chart, and if you had that level in, you would have seen that yesterday's big outside reversal candle when there was some news that was negative, positive for the US dollar came out later in the evening yesterday, and price dropped significantly, and then it's rallied back up to the same area. So if you had that area drawn in earlier in the day, when we get to the 15-minute chart, there's been a failure up there at that level. So it's weekly support broken, becomes new resistance, and simply waiting for a trend line break. That's my entry. It's already at break even. I had a 20 pip stop on it, and the trade itself has been showing about 26 pips of profit. Okay, I've just got it at break even. Prices are going to move down the range or not. May come back up to revisit resistance again and fail. Who knows? But can't take the trade now because price has already dropped. Now I'm anticipating maybe price might come down to support again. The question is though, we are very much overextended in the short term, so we may pop above this area, might trade up to maybe 72. Time will tell, or this area might hold. But the key that you really need to get across is that there's a very sustained trend at the moment. It'd be a hard trade to trade against it. So we might pop up a little bit deeper because we are a bit overextended, but at the moment, weekly resistance is holding the market. So, I'll be watching that level to hold, or later, maybe watching that level. If price gets back above it, waiting to see if we can break back below for another advance down to 71.06. All right. So, don't know whether anybody got that, but that was a nice entry up there. And there's a few pairs. The New Zealand dollar was very similar. So these are pairs that are highly correlated, the Aussie dollar and the New Zealand dollar. So let's go through the high time frames. Look very similar. The monthly chart, lower tops and bottoms. We actually broke the last low here yesterday. Just holding there. Monthly MACD's turned down now. Weekly trend is going to be showing to down and broke the last support low, exactly like the Aussie dollar looks. And can the market move down through? MACD's crossed down. And price action is just stuck between monthly support at 68.04 and weekly resistance at 68.58. Here's your daily chart look. As you can see, rejecting monthly support, holding underneath now at weekly resistance. Yes, like I was just saying on the Aussie, this could get above weekly resistance and start to move back up. And then you'd be looking higher up at maybe the last broken level of daily support up here, 69.79 for, does price move back up there and hold? And then can we look for an opportunity to trade down with the trend if we do break above? But in the meantime, we're holding at weekly resistance. There's the 4-hour chart. Again, big outside candle yesterday down, and we're challenging the high of that candle today, lining up with weekly resistance. And on your 15-minute chart, very similar trade, highly correlated to what's going on the Aussie dollar. We've seen trend line break. And again, set the trade up, trades at break even. Trade itself has seen about 20 pips of profit. And if this isn't a demo account, I only use a demo account when I'm doing a webinar. So, I'm not broadcasting my live account number or anything like that. And just showing you what you could be doing at these areas of resistance if we were, discussing it back in time. Now, as with the Aussie dollar, I may be anticipating this might move back down to give monthly support another retest. Can we move down and through that area? Time will tell. So, watch 68.58 at the moment to be resistance. If it further fails, maybe there's an opportunity there for you to sell down with your trading strategy. All right, getting into now, just going to tab through a few of these pairs. Just see what's going on. All right, I'm just going to go to the Aussie yen. This is another pair that had a trade setting up at resistance as well, very highly correlated to the Aussie dollar, New Zealand dollar. There was a trend line break here to trade down, playing at resistance. So let's go to the higher time frame. I did an analysis of this pair this week on the website, discussing this double top up here. And what I was saying was that, I'm just looking at the chat, just pausing, looking at the chat, that we're going to double top here, possibly forming, and long term, if this breaks the long term support area here, we could be traveling down to the height of the pattern projected below at 69.90. So weekly trend is actually still up. We haven't broken below the last higher bottom yet. So we need to bear that in mind. But the negative thing I'm seeing is the MACD's crossed down. On the day chart, we had a big drop on Friday, and we broke through this weekly top here at 82.019. So for the weakness in this pair to remain, we really need to stay below 82.019. So at the moment, we're seeing a little bit of positivity on today's candle. So we could move further up. So if we do move further up than where we're at the moment, then I would be looking at 82.019, see if that holds as resistance. If it doesn't fail, then I'll be looking to trade down from that level. At the moment, you see there's actually an area of daily resistance here at 81.37. And whilst the market over the last, including today and the last 2 days prior, once we drop below that area, we've just been coming up and testing it, and we traded about 10 pips above it, I think. And if we move it to the 4-hour chart, so don't forget this is a clear downtrend on the daily. My bias is to be a seller. Move to the 4-hour chart. That daily area, you can just refine it a little bit to this 4-hour top here at 81.40. It's actually 81.40 and 2. All right, so you can see a band of daily and 4-hour resistance there. So we came up to that area today. And if you got your resistance drawn in and you were watching, what you would see is that price comes up, we could draw a trend line up, it got broken, rejected resistance. You can see where I took the trade, trades at break even, it's risk free. And is it going to move back down the range with the trend? All right, so what I'm showing you here is price action is moving back up to resistance, looking to trade down from resistance in line with the higher time frame day chart trend. So there's a nice failure up there. So can't go back in time, but price might revisit that area again today, hold and fail. If it moves above, then I'm looking at the 8200 level to see how that acts as resistance for a trade down. Okay. All right, somebody was telling me, Nathan, you were telling me the dollar yen looks like it's in a nice spot. So let's head over to that pair. All right. Monthly chart. We've been discussing this monthly area of resistance up here. This is at 114.72. Last week when we were above, we traded above 115. I was saying we haven't been above that area for 4 years. And I'm not sure how many buyers will want to be able to buy up there, keep the market up there. And as you can see, last week's candle was very negative. We did trade above that area for a while. Some traders are getting positive. This is going to move up and up and up. But quite clearly then on Friday, it got heavily rejected. So I've got monthly resistance here. Move to my weekly chart. I've got weekly support drawn in here at 112.72. This is actually monthly support here. at 112.21, and this is monthly support here as well at 111.65. So these are the barriers that the market's going to have to contend with as the market tries to move down. So we've actually had, last week was a very negative outside week. The week before I thought we'd top because we put in this rejection candle, but we went further up and totally rejected the monthly area at 114.72. And we've actually changed the weekly trend because we've broken below the weekly higher bottom. MACD is not yet confirmed the trend, but that'll be delayed. So the weekly trend has now turned to down. And at the moment, the market is just holding at these daily old support lows. So let's draw them in. And we went through MACD negative divergence last night. On the daily, quite clearly, there's divergence on the top. So I'm anticipating a further move down over time. Price might want to rally back up deeper. Time will tell before we can do that. Did have a big drop Friday, so the market's now just kind of regrouping a little bit. Let's just put in these areas of resistance. There's a 13,582. So that's 113,852. Sorry, I must have got that one wrong. 113,582. And the next one up, 113,748. So if you're getting your support and resistance drawn in properly, these are broken levels of daily supports after that big plunge. What you'll see is that the market's been respecting those on any kind of rally that we've been having. So moving to the 4-hour chart, whilst it's been above, see these 4-hour moves, they're all getting stopped at or close to this daily level of resistance. There's a 4-hour level in here too, which you can see has been calling a finer area where the market's been topping. But we've obviously moved down. We're rallying back up and we're holding at this daily level of resistance here on 13.58. So let's just move it to the 15. I'm just going to go back to this 4-hour chart a moment. I just want to draw a fib in from that top to the final bottom. And we're in between the 62 to 79% retracement. And what we're seeing, that daily level of resistance, where we had a massive run up with some positive US news yesterday evening, got held at that daily resistance, came down, and we can see here it's been holding twice. It's kind of double topping on the 15-minute chart. All right, now it's up to you whether you think this is a good area to trade, but if you want to trade at resistance, and there's a pivot there too, we're a little bit down from that area, but you could be waiting for a trend line break. Sometimes a trend line break isn't the most perfect way of getting in because the trend line is miles away from the area that you want to trade against, or you could be trading at the level. Now, a little bit down from the level, but clearly we're getting a reversal. So, often what I will do, and I'll just show you, I can just sell at this area of resistance. I'm a little bit below it, but then I can put my stop 20 pips above, depending on what I want to risk at the area of resistance. In fact, I might want to just go above both areas of resistance. So like a 30 pip stop. And then looking to trade down towards 112.72 weekly support at the moment. All right. So that's how you can trade against resistance. In a perfect world, if I was watching this, I would be trading right at the resistance level, but doing it live and just showing what you could be doing. If you felt that was a good, strong resistance area to trade against, then that's how you could do it. Yes, you could be waiting for a break of a trend line if you want to wait for more confirmation, but whether or not price will give you a tight break of a trend line here, I don't think it will, because this trend line's miles away from price action and the resistance area. All right, so we can follow that. I've got no idea if that's going to work, but I'm just showing you how you can manage your risk, get your stop above your 2 areas of resistance, and then, my target, I'm going to be targeting at least twice my risk. 75 pips down in weekly support at the moment. Okay, if I wanted to, if I thought back to my day chart here, just take that fib off. If I was thinking about taking a longer term position at that area, I thought, okay, resistance is now going to hold for the long term. I'm going to move further down. Then I could just be trying to get my trade to break even and holding the position for a long term move down. Got something coming in the chat. Harash, how are you today? All right, so you're telling me there is an ascending triangle on the dollar yen. Can go up, or do you feel will return from the Fibo 79? I'm not quite sure where your triangle is, but for me, I'm looking at this as a move down that range there, rallying back up. It hit the 79% yesterday. Today, it's been a fraction short, so that's telling you that the sellers are now protecting that area at the moment. And then we're obviously rejecting from that area at the moment. I mean, it could move up further. I can be wrong. I'm just showing you how you can construct a trade against resistance with the trend. So yes, it could later in the day have a further sniff at the 79% level, but I got my stop above my two resistance areas and the 79% level that we failed at yesterday. So the buyers are going to have to get in and move it above the top that got put in yesterday intraday when the news came out. So they're going to have to get above the 79% level, above the 113.74 resistance area to make me wrong. At the moment, price is heading down. So we can come back to that later, see what it's doing. All right, so I've done the Aussie yen, Aussie dollar. Let's get to the euro yen. Took another trade here just to show you what you could do. So let's go through how I conjured that one up. All right, to the day chart. Now, the trend on the daily, but we'll go to the high time frame first of all. And we're breaking or trying to break through this area of weekly support, 127.92. I'm going to go to the monthly first of all, just to give you a higher picture. Cross down on the MACD now, that's very negative when we're looking at the monthly chart, because when we get cross down on the MACD on the monthly chart, that often then means that we're going to get a long-term trend. I'm just pausing because I was looking at the chat and Harash was asking me how I am. I'm very well, thanks. So we've got a lower top, lower bottom coming in, MACD is crossing down. We could be having a long-term move down the chart from the cross. Weekly trend is down. We've broken below the last support low, even though we're actually above it. We've broken the low, changing the trend. MACD is quite clear, crossed down the weekly two. Daily, we're just bouncing off this level of support here. Can it trade down and through over the long term? So I had a fib drawn from last week's high, which is here, down to the current low form for this week. What you'll notice is, as we get to the 4-hour chart, is that we've actually rallied to the 62 today. Don't know if that's going to hold, but I've started to see price reject in that area. I'm going to move to my 50-minute chart now. As well, if you look left, there's some 4-hour old support that can act as resistance here. That's at 128.686. All right. So, and there was another area of 4-hour resistance here at 128.59, which we've been testing, trading through. So there's a couple of areas. So I could put both in, 128.599. So it forms a little area of, there's 599, 128.599. Just double checking, that's right. So we've actually got 4-hour resistance, 2 levels of 4-hour resistance very close together. Don't forget the day chart trend is down. We're just rallying up within this fib range. So what I saw on the 15, price was moving up into this area of 4-hour resistance, came up to a pivot, got within a pip of the 62, then came down, came up for a retest, and I started to see it withdrawing from the area. So I just clicked in, trades at break even now. It has dropped from the area, 40 pips. So if you wanted to risk 20 pips and make 40 pips, you could have approximately done that. But I was just wanting to hold it to see if it could move down the range and show you what you could be trying to do. So I have had the opportunity of getting that trade to break even. So it does pop further up. It's a risk-free example of a trade. Now, of course, if you're not already in it, then you might be thinking, well, it's moving back up to resistance here. Do I want to look to take a trade? And if I was want to use a smaller fib across this minor range here, what you're going to see is we're at the 62% rally of that whole move down. Potentially that could hold and then trade back down. You might want to wait for some more confirmation depending on what type of trader you are. But obviously, this big blue candle moving up came up to that 4-hour level of resistance at 128.59. It's traded, it rejected it a little bit on the candle, and the last 2 candles haven't touched it. So maybe the sellers are positioning themselves there, holding it for the market to move down from that area. So you have to decide what kind of trader you want to be. Do you like the level? Do you want to trade it on first touch, on a retracement back to the area? Do you want to trade it on a trend line break? How much confirmation do you want from the area? So depending on how much experience you've got, it's really then how much confirmation you need from a confidence point of view to take a trade at an area. So there's a good area of resistance there. I never know whether an area is going to hold or fail, but normally I'm risking 20 to 30 pips when I'm taking a trade at resistance. And I'm making sure I've got at least a multiple of 1 to 2 reward, in this case, down the track on the chart, or even more of a risk reward than that. Okay, so you can monitor to see how that holds, but it's in a nice area of resistance, just as to whether the market wants to hold there and move back down with the day chart trend. All right, getting to euro dollar, and to the weekly, a strong move down, and it's a little bit overstretched. We've had 1, 2, 3, 4, 5 weeks down. That last week there was positive last week, and we're having a positive week at the moment. So we're having a week up. Doesn't change the overall trend. We're just having a week up. So that being said, just pausing because I've got something coming in as a question. So Harash, you're asking me, as per you, Duncan, best is candlestick resistance, confirmation, or trend line break, pivot, MACD, cross and fib. Which of the two to take the trade? Well, you're asking me a difficult question. So let's just go back to that example of a trade here. This setup here, you could have traded up here at the 62 fib once you started to see this negative candle. So you could trade a rejection of a 50-minute candle. That could be an entry technique that you use. That answers part of your question, which is the best way to get in. Candlestick rejection, you could use that as confirmation. If you're doing that sort of trading, then you're using the less amount of confirmation possible. You could be waiting for trend line break, MACD cross, you're waiting for more confirmation. The more confirmation you wait for, the further away you're going to be from the area when you take your trade. So the more pips you're going to risk, and you're going to have to wait longer for the trade to get to a break even or positive position. Okay. Or you can, as I just showed you, wait for a rally to rally back up, like it's done here, to the 62 or the 79% of that minor fib range, and then take a trade. Your question being, which is the best to use? It depends what mentally works for you, because I can trade any of those techniques in any given day, depending on what I'm seeing. It depends. As a lesser experienced trader, you tend to want more confirmation, because you want that warm, fuzzy feeling that you know you're going to be right before you take the trade, even though you don't know you're going to be right before you take the trade. But that's what happens in your mind. You go, I need all this confirmation, so I know I'm going to be right before I can take the trade. Whereas for me, because of what helps me take trades at key levels, very close to the level without too much confirmation, is the fact that I've seen it happen more and more on the charts over 15 years, that it happens all the time, that, you know, I'm confident I can pick a strong level, and then I'm happy to take the trade at that strong level. And if I'm wrong, I'm wrong. But when I'm not wrong, I'm right quite nicely, and I make, you know, a good return on my pips. But that's trading from experience. So the lesser experienced you are, you probably want to have more confirmation until you've had the chart time experience where you can see that you're calling these levels correctly more times than you're wrong, and then you can trade at those levels aggressively. Okay, that's the best answer I can give you. All right, let's get back to the euro dollar. And got another question coming in. Right, Remo, your question is for MACD. Should I also wait till the lines cross the zero line? So no, for me, I just wait for the blue line. Let's say I'm looking for a sell on a 15-minute chart. Let's go back to this example. I only wait for the MACD to cross below the trigger line. I don't wait for it to get below the zero line. I just wait for it to cross the red line, okay? For me, it doesn't need to be below the zero line for me to go and sell it on a 15-minute chart. It just needs to cross. All right, hopefully that answers your question. All right, let's get into the euro dollar now. So the weekly trend is down. As I was saying, it's having 1 week up. That doesn't change the trend. Might change the trend on the daily or the 4-hour. Doesn't change the dominant trend that we're seeing on the chart. So it might come up to this old weekly area of support, which should be now new resistance because we broke below it at 114.22. So watch that area, 114 to 114.22. That could act as resistance to hold for the next move down. So your daily really hasn't changed the trend on the daily. Just pausing again, I got another question. Okay, Olivia, you're saying, I think it's the histogram that crosses the zero line. Well, let's go back to that 15-minute chart. The histogram, when the line crosses the red, blue line crosses below the red, yes, the histogram is then below the zero. But some traders, they only like to trade using MACD when it's below the zero line, like this example here. They wait until price starts falling, and they don't get in until the blue line crosses below the zero here. For me, that's just way too late in the game. All right, so I think that's what Remo's question was more to do. But if you were just asking me about the histogram being above or below the histogram, when the blue line is below the red, the histogram's below zero. When the blue line's above the red, it's above the zero, okay? So hopefully that qualifies everybody's questions. Okay, euro dollar. From a day chart perspective, high tops and bottoms or lower tops and bottoms, this is in a downtrend. There's a lower top, breaks below that bottom. That's a further lower bottom. MACD is crossed up, so that's really just telling us that we're in a short-term bottom, and we are going to maybe cycle back up in the short term. Doesn't mean to say we're going to get a major reversal. Could be 1 or 2 weeks, 2 or 3 weeks. Dominant trend on the monthly and weekly is down. And it's actually come up here, price action wise, to a minor daily chart top here, which is this area here. That's at 113.74. So it's a little bit short of the 11400 number, 25 pips or so below, 26 pips. But what you can see is market has yesterday topped at that level. So is that where the rally's finishing? Time will tell. 15-minute chart, is it giving us any trading clues? Well, we have a massive drop yesterday. What we tend to do on those massive drops is put a fib from high to low. And what you can see is this spike up on the London Open stopped at the pivot, fraction above the 79% retracement. So potentially that could be where the high of the days come in. Traders are quite clearly, big drop, price action reclaimed a bit more today up to the 79% area just above in that pivot. Big 15-minute rejection candle. We may well see a further move down from the area. I don't really like where price is just sitting at the moment. I'd much prefer price to get a bit higher up, fail at the 114 level or at the 114. What does it say? 114.22 area up here, because then I'm at a good level of weekly resistance, or I'm at a key figure level that the market might want to respect. That's what I'm seeing at the moment. Even though it's failed up here at the 79 level, it's come down, got a bit of support at the 113 number, back above the pivot, central pivot. For me to trade this pair at the moment, I'd probably need to see either further failure where I've just drawn this in, or a failure up here where it failed yesterday at the 4-hour resistance area, or 114, 114.22 further up. For me, I'm not sure if it's finished its rally yet on the daily chart. Of course, I could be wrong, but I'm just not seeing a setup there that I think, okay, that looks great. There's nothing like the setup we saw earlier in the day on, for example, the Aussie dollar when it failed against this weekly resistance. Failing at weekly resistance is a great area to trade down from. So when we're getting back to the euro dollar, I'd love to be trading down from weekly resistance up here. It's not there, I know, but that's a level of watch over the course of the next week. All right, and just one more thing. Obviously, I'm not seeing anything here I want to do at the moment, but my dominant perspective of the euro dollar is that it's in a downtrend on the higher time frame. So that's what my bias is. So if we do trade down today, doesn't mean to say I want to trade it though, even if it trades down, because I'm not seeing anything I like in terms of a setup. But tomorrow, if we trade below 113 quite nicely today and we hold below 113, maybe we close down at, I don't know, down at 112.75. Then tomorrow, if we come up and fail at 113 and 113 becomes resistance, then I'll be getting more excited about trading the pair down, because then I can see a clear area where I'll be happy to trade down from a level of resistance that I can understand. So at the moment, it just doesn't, it's not right next to a level of resistance that I like to trade against. Nathan, just reading your question. You're saying euro dollar or euro yen, what would I prefer to sell? Well, hopefully just from what I said, euro dollar at the moment, it's not at a level that I like that it's failing at. Whereas the euro yen, it's quite clearly failing at 2 4-hour levels of resistance, and it's rejected the 62% retracement of that bigger range. So there's a lot more there that we're right against at the moment. You can see it failing at that minus 62 I've just drawn in, and it's failing at, let me take that fib off because it's just hiding my resistance a bit, but it's failing at that 4-hour resistance. So this resistance area that I've drawn in, quite clearly price is respecting it. Whereas we're not against anything at the moment on the euro dollar. All right. Well, have a quick look at the pound yen. Pound yen at the moment is trapped between this monthly top over here, 156.59, and there's an area here of resistance, 148.87, monthly resistance here. And there's a monthly area low here. I think I've got my line drawn in slightly higher up on a weekly level, but there's a monthly level there where my mouse is at 148.45. So hopefully you can see we're trapped in a range area of monthly support and resistance. It's not exciting me because it's just in that range, but the fact that, let me get that line moved, the bigger range is there, then I anticipate we're going to move down this way over time. At the moment, we're obviously holding on support. So we can see all these weekly lows. So they're coming in. Now the lowest point at the moment is there. What I like to do though is I like to put in the one that's getting false broke. So we put that low in, then we put a higher bottom in here, and then we've been false breaking here, here, here. So I'll be using that level at 149.056 for support, just because it's the one that's been most respected. I could use the lowest point if I want to, but all right, so the weekly chart, it is managing in terms of price action, higher top, changing the trend to up, but it was a false break. We haven't broken below a bottom yet, so it hasn't, in terms of pure price action, changed the trend. But what I do see, said the same thing on the Aussie yen before, is that this weekly high, we traded back below it at 152.846. The fact that we traded back below it means the market's weak. The buyers couldn't hold it at weekly support, 152.846. Get the right numbers in would help. There we go. All right, so now what you can see is on the weekly, we're stuck between weekly support, weekly resistance. Notably, the MACD's crossed down. If you're in the MACD lesson yesterday, I said when we get a good cross down on the MACD on the weekly, we usually get a long-term trend unfolding. So that's what I'm anticipating. Day chart trend is down. So I'm not going to go any deeper into this pair at the moment. What I'd like to see is price come back up to 152.84 or come back up to these old daily levels of support at 152.32 or 152.51. What does price do at these levels? Does it hold, start to turn back down? If it does, that's the area where you want to, so this area here, this is the area where you want to look to engage for an opportunity to sell for the next move down to this area of support, and can that area of support break? So if you sold up here and it moves down, you're waiting for this area to break, hopefully to move further down the range. Got a question coming in. All right, it's quite a large question, so I'm just reading it to myself. All right, Harish, it's quite a detailed question. So you're saying still stop buy order, best thing to set a trade up at the 62 or 79% level? Well, it depends if you want confirmation of failure at those particular levels. So if going back to this euro yen example, just go back to, I'm going to turn it to a 1 hour chart so we can see the fib tool that I drew. High to low, we'd be moving up. We actually got to the just short of the 62. Now, if you thought that area was a good area to trade at, you could set a sell limit order at the 62 level to take you right in at that level. All right, so I know you talked about stop buy, but it would, if you're looking to take a trade on the pullback to a 62% level or a 79% level, you're using what we call a limit order. If we're dealing with a downtrend, you're using a sell limit order. If you're dealing with an uptrend and it's pulling back, you're dealing with a buy limit order, okay? So that's how you can set up an order there to take you into the trade. You're also talking about, is there a way that you can set up an alert so you know when it gets to those levels? If I can just remember, if you right click in the area where you want to set up the alert, so let's say this 79% level, you want to know if price gets up to this 79% level here. right click on the chart, go to trading, go to alert, and you'll see just here, not that clear, but there's a little red arrow set up for an alert. Okay, if you then go to this button here, and then come to the alerts tab, you can refine the alert. So I've kind of shown you how you can set it up. Go ahead and have a bit of a practice. I'm sure you can work out the best specifics, the specifics of getting that to work for yourself. Okay. All right. Final pair I want to go through, and then somebody can shout out to me if they want me to review anything before we conclude this evening. Just want to see what the dollar yen's doing before we go along. All right, so dollar yen starting to move down from that area, showing a few pips of profit. So it's nice that I don't get egg on my face when I show that we're trading straight at resistance, and then it does hold. And that euro yen showing the same kind of weakness there as well. All right, New Zealand yen. All right, a lot of these pairs, Aussie yen was the same. If you're looking at the monthly chart, we got these railroad tracks showing. There's the New Zealand yen monthly. Here's the Aussie yen monthly. Look at those railroad tracks. That's really telling you, unless some news comes out and changes the whole news environment that the market's trading to, we should get a month down this month from that candlestick pattern. All right. Nothing's ever 100%, but what we're seeing on the Aussie yen, railroad tracks. Same on the New Zealand yen, railroad tracks. I think even go back to the euro yen monthly chart. I'll have to take my fib off so we can see it. Not perfect railroad tracks there, but very similar. All right, so 3 highly correlated pairs showing you railroad tracks. Aussie yen and New Zealand yen were looking a little bit nicer. So here we have rejection here at 80.17 area, and also these other areas of resistance here. So we traded up to, these tops above this top, maybe almost touched that top, a bit short of that top. So clear area of resistance that we traded into and heavily rejected. MACD on this pair hasn't turned down, but it has on the Aussie yen, I think on the euro yen. Weekly chart hasn't quite changed the trend in terms of price, but the MACD's turned down, and also we're seeing MACD divergence. So what I'm just trying to highlight to you is that some of these pairs are really setting up for large moves down potentially. And one that's in its earlier stages, the Aussie yen's in a bit of a later stage in this pair. This is in its early stage. We're seeing negative divergence on the weekly. Okay, what I'd like to see or watch now is this weekly top that we've broken back below, 78,644. Do we come back up to that level and hold below? Does it become resistance? And if we're moving down, it's going to need to obviously break this level here, 76,329. So I did mention to you before on the dollar yen, we've got daily chart negative divergence as well, where this, this time up here failed. On the dollar yen daily, there was negative divergence. So we've got on the New Zealand yen, we've got negative weekly divergence. No negative divergence on the daily, but quite clearly it's trending down with this big drop Friday. So we may get back up to this area of weekly resistance, 70, what did I say it was? 78.63. At the moment, like I was showing on the Aussie yen, This daily level here is acting as resistance. So these are looking very similar, highly correlated. 77.90. We touched the area today. To the 4 hour. There's 4 hour resistance there. This looks very similar to the Aussie yen. 77.778. It's nearly all the sevens, 8 on the end. All right, so we're moving up to resistance. Now, the question obviously is that going to hold? Or are we going to move up to that weekly level that I just emphasized? Price action on the 15, if you were looking for failure up there, depending on how aggressive you wanted to be, we had a rejection candle. You could have traded that. We've had a trend line break. And obviously we've moved down. We're having a minor rally back up. So, of that move down, you can draw a fib. I'm pretty sure the 62% lines up with the level of 4 hour resistance. It's been a fraction short. Maybe it's not going to get up. I mean, you could be trading at that 62 level. Could have an order sitting there, sell limit, trade down from that area. If that's the way you wanted to trade it. You could have already traded it on the break of a trend line. Or, you're just waiting for it to start to move down from the area once more. That might then, emphasize your decision to get in. At that failure up there, I'm just noticing there's a very minor level of negative divergence. We discussed that yesterday. So what I'm seeing is day chart trend down, moving back up to weekly, daily resistance. Failed right at the daily resistance area, trend line break. Then we're having a minor rally back up to retest 4 hour resistance, some negative divergence there. I'm like everybody else, I don't have a crystal ball, so I don't know if it's going to move down long term for the rest of the day, but obviously we're seeing some weakness there and some selling pressure moving down from the area. So, you need to make a decision yourself. Does that look good to you? Does that meet your trading criteria to trade? But just showing you there what you could be doing, trading against resistance. So that's very similar to what we saw on the Aussie yen here. So what I'm really trying to get across to you today is highly correlated pairs, Aussie yen, New Zealand yen, exact same sort of trade down from 4 hour daily resistance. Aussie dollar, exact same thing. New Zealand dollar, exact same thing. So that's the New Zealand yen. New Zealand yen, exact same thing. This rally up here at the moment, probably a 62 rally from that first drop down. 62, holding there. You can watch this. Is that a good entry area to trade down for a further move down through the course of the day? So I'm giving you lots of ideas of how you can execute trades. The first criteria is you must find a good area of support or resistance. In the examples I'm showing you tonight, the levels I'm looking at, they're all resistance areas trading down in line with the dominant day chart trend. All right. All right, we've got 2 minutes left. If there's a pair you want me to look at, put just one pair. I'll have another look at another instrument before we conclude. Hopefully, though, you got good information from those levels and how you could be trading them. I mean, I don't like to toot my own horn, but I'm just showing you here how you can trade down from resistance. And I've showed you 1, 2, 3. New Zealand yen, I didn't take a trade here, but that's 4. New Zealand dollar, 5. Dollar yen, 6 trades there that you could be trading down from resistance, and not one of them yet has failed. I'm not saying that's the story every day, but all those pairs are quite highly correlated. And they're all holding at good levels of resistance, and they're all trying to trade down from those areas. So you could have got these trades to at least break even. All right, Harish, I think that's gold. So let's have a quick look at that. All right, so the monthly trend here, it's really kind of sideways at the moment. Monthly support, monthly resistance here coming from this top over here. So it's consolidating on the monthly. I don't really like it where it is because price is sitting right in the middle of that range. I'd much be happy if it was down on support or at resistance, so you could trade up or down from those areas. The weekly trend did turn up when it broke above this area of resistance here, but it failed at this level of weekly resistance, 1875.74. So the weekly trend is up until we break that low, but for me, you know, it's not holding. It held at that resistance level. It couldn't hold above this area of resistance here. That was a very dominant area for a long time. So that was really a false move above. So, and as I said, it's sitting right in the middle of the monthly range. Day chart. This area just here. So the market tagged it, rejected, fraction short yesterday. That's where resistance is now, 1810.35. And it's a little bit choppy in this area at the moment when we get to the 4-hour chart. So it's kind of, you know, that's your weekly level of support, just there. 1758.71. So if we move down, this area could well hold for a move back up. If we move back up, this area at 1810.35 is proven to be resistance. And there's a minor daily level here, 1778.44. That's the market's, you know, trading below, getting back above. Move to the 4-hour chart. So it's really consolidatory to slightly down. You know, we dropped below, we're running back up. I'm sure if I draw a fib in there, that's like a 62% retracement. This is the 1-hour chart now. So we've had a rally up to the 62% level, and we're coming back down and retest that day support. So it's looking a little bit more to the downside. I don't like where it is based on the monthly chart. It's right in the middle of the range. So it's in the middle of the range, and then it's in the middle of the range on the monthly chart, and now a range bound on the 4-hour chart, just slightly down. So for me, if I wanted to trade, it looks to me like the trend's down from moving it down from the day chart. You know, the day chart, lower top here to a lower bottom. So for me, if I was looking for a trade, I don't like the price action, but you know, I'd be looking up here, maybe in this area, 1810, 1800. What if it gets back up to that level? I'll be looking for failure. And then, you know, does it give me an opportunity to get a nice tight entry to trade down? And where it is right now, you know, if you are more of a buyer than a seller, I mean, the day chart trend to me is down. So I don't know if I want to be a buyer because I'm going against the flow of that. But if we come back down to 117.78 and hold, you know, it's got a 15-minute chart. Just looks like it's holding at central pivot here. So that's negative. Not seeing any reason to buy it at the moment. And I don't like where it is to sell it either, because if you sell it right now where it is, you're just not very far away from day support. I'd much prefer to be up here. Or, you know, let me just put my fib back in. We've already failed at 62. Today's projected high is quite near that pivot. So, you know, you could be looking for failure at this pivot up to the 79% retracement area. if it got up there today. Tomorrow, I'd much prefer to see a fair up here at 118.10. Doesn't say price will ever get there though. But you can see up yesterday, we got up to 118.08 and price didn't like it up there. So it's telling you that big drop that sellers are watching up there. So anywhere up here, 11800, I'm sure the sellers there looking for an opportunity to trade down from that area would be, good. All right, everybody, we're just past the hour. Hopefully you got some good levels there. You've got some good value, how you can be trading from today's analysis. Just to let you know, if you're on YouTube, or for those that are in the webinar now, coming up tomorrow, 2nd of December, we've got the average true range and session opening times. I'm going to take you through what they are. That starts at 8 p.m. Sydney time tomorrow. So if you've got the time, look forward to seeing you then. And then into next week, we'll be going into some of the trade setups. All right, that starts on Tuesday, 8 p.m. Sydney time on the 7th. All right, everybody, thanks very much for attending. Hopefully, got some good levels there, some good information you can take away with you to either test or levels that you can start to apply to your own trading strategy. All right, thanks very much, Harash. Remo, you're asking me what is today's projected high. Well, I'll take you through that tomorrow if you attend tomorrow's webinar. I'll be discussing it then. Liv May, thanks very much. Thanks for your comments. All right, everybody. Thank you. Have a great evening. If you're on YouTube, thanks very much for attending. Have a great evening.